This is something we've been saying probably like a broken record for, it seems like weeks now. It has been. The NASDAQ, new record high, new record high. Is this something that worries you a bit, that it just goes up in a straight line?
Well, it doesn't worry me because as an investor, I would never have 100% exposure to any one segment, sector, or aspect of the stock market. We preach diversification. Most of the people that we give financial advice to are already wealthy. Our primary mandate is to keep them wealthy, not race against the triple Qs and try to do better than it over any 1, 3, 5, 7 year time frame. So it doesn't worry me, but people are going to pay. There are two ways that you get beaten up in this market from buying stocks at any price and paying any level for a quote unquote great company. The first way is obvious. Any minute now, the music stops playing and everyone scrambles for a chair, and it turns out that there are way more sellers than buyers when some volatility gets reintroduced to this space. That's happened before. It'll happen again. It's not necessarily the death knell of a particular trend like tech outperformance, but if you're fully exposed, if you're leveraged, it hurts. The second way people pay, though, is more insidious for long-term investors. You end up owning an asset at a multiple that's so high that even if you're right about the fundamental picture going forward, in other words, even if you say, I own this company because I think they'll quadruple their earnings over the next 10 years, you could have that part right and still either lose money or break even if you pay too high a multiple for those expectations that end up coming true. That's called correcting through time. So I would suggest to you, Dom, that it is a very real threat to many people who are acting right now as though they're bulletproof, or that they can have a complete understanding of everything that's about to happen in the economy over the next quarter or two. Those people are in trouble. I don't think most investors, though, are taking those types of outsized concentrated risks. And so I'm not worried from a macro perspective that that's going to all of a sudden implode on everyone else.
All right. I mean, you mentioned that kind of bulletproof stock idea. I just want to put up a few names here because since the March 23rd lows, we've seen kind of mega cap technology and communication services names, the brand names that we all know, and they've been pretty much bulletproof. Apple is up roughly 68% since those lows in March. Facebook, 67%. By the way, a new record high for Facebook today. Amazon, 61% gains. Microsoft, 57%. Alphabet, 44%. Even Netflix is the laggard, only up 38% during that time span. If you're looking at all of this, and Stephanie, I'll turn to you here because I could turn to any of you because all of you own some portion of this particular group of portfolios, Tech's Big Five. Is this a market that is bulletproof, in Josh's words, when you have those type of names leading the charge the way that they are?
Well, they all have a lot in common, the names that you mentioned. Strong balance sheets, good free cash flow generation, market share gains, and they're all work-from-home beneficiaries, right? And they're benefiting from cloud and 5G and the recovery in advertising that eventually we'll see, and AI as well. So they all have a lot in common, and I don't actually think all of them are all that expensive, other than Amazon. Amazon is expensive, but if you do a sum of the parts, you can kind of get away with that one, too. But for what the growth that you're getting, if you're paying like an upper 20s multiple, I actually think that that's reasonable, given that these are secular growth stories. And in a low economic growth environment, you're going to want to own some of these secular growth names. Now, I mean, I actually have sold Facebook because the stock is up 64% from the March lows. But also I think that their multiple is capped, given this advertising issue that's happening to them. And it's also a little bit anti-ESG-like. So I think at this level, I think that one is the one that I've taken the profits. As I said, it's up 64% from the March lows. And I think that if multiple is capped and earnings are capped because they're going to have to invest heavily, that one I think could actually start to lag.
So John, interesting that Stephanie brings up that trade right off the bat in this show here. I mean, Facebook hits a record high today, despite the fact that we have these ad boycotts that are still ongoing, besides the fact that the top brass over at Facebook, including CEO and founder Mark Zuckerberg, are having meetings with civil rights leaders to talk about hate speech on their platform. All of this is happening right now. What exactly then does that lead you as a trader, John Najarian, to do with some of these types of moves? Is now the time to take profits? Yesterday, you were telling us about selling at the money calls for some of these big runs that you've seen as of late.
Absolutely, Dom. And I still think that that's a prudent way to approach it. Pete and I both doubled down on Facebook, when it had that, when the boycott started to hit and the stock broke 220 and traded under 215. And now look at it, back to 245, 246, a new record. There are only so many platforms on earth, Dom, that can get you the billions of people that Facebook can give you. And I think that an awful lot of this is just hot air because, people could look at Facebook and say, oh, but they're allowing, not promoting, they're allowing right-wing this or white supremacist that. What they're doing, Dom, is allowing a platform to basically be out there for these billions of people, not just targeting a group like, again, white supremacists that most of us would like to see banned, but then saying, well, what about BLM? What about all the other opposite side? Do we ban them as well from the platform? And some of us would say, no, I think you're better off being that platform that gives voices not to hate, but that gives voices without the censorship. You don't have to follow this stuff.